Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Roundup. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech. I'm here joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
Great. And our good friend, Lindsay Davis from Atomic. How are you, Lindsay?
Doing well, gentlemen. How are you?
Great.
Doing
So
good.
why don't you, before we get started, Lindsay, give us all a 30-second promo for Atomic.
Yeah. So, hey, everyone. I'm Lindsay Davis, head of markets over at Atomic. We build payroll connectivity that enables financial apps to embed financial activity to their payroll accounts to either set up or switch to direct deposit, as well as access digital verification of income and employment statements.
All right.
Yeah.
All right. And so Lindsay was formerly at CB Insights. She follows the fintech space very closely, and which why she's joining us here today. And so I want to get started. I actually want to get started with PayPal, because I really think this is a pretty impressive release today. And I've been using PayPal for probably 20 years. I mean, I was a pretty early user of it, and just when I thought it was so cool, you could send money with an email address. But what they released their super app this week. And, I read through it. I thought, this sounds pretty interesting. And I was playing with it on my phone earlier today. And it's, I think it has a lot of potential. I think people probably, PayPal, while we all know PayPal is a behemoth, they've done extremely well. You don't necessarily think of them of cutting edge of fintech, but I think they probably are. And this is, I think, without doubt, the broadest, most fully featured financial app available in this country today. And I'm pretty impressed. What do you guys think?
Oh, I like the caveat in this country.
Yeah, well, I mean, we can't compete with the Chinese financial super apps, because they are really fully featured.
I think, this is the interesting part, at least to me, is that you have the PayPal ecosystem. You have the Square ecosystem, you have the Apple ecosystem. It's like all these little ecosystems are cropping up, and all they want you to do is stay within that ecosystem. Square buys Afterpay and keeps people more in their ecosystem. So to me, this is the, I guess, race for the next few years. This is something Revolut talked about many, many years ago, and Nikolai was kind of on their way up the scale. They added new features this week. Robinhood added new features this week. It's kind of this race to create this new age financial services firm that then works with others to keep you inside a certain group of either apps or one app. And I'm curious to see how it plays out over time, because if you get these super entrenched communities, how do they start playing with one another? Or if they do, or if they don't, and what that means for the ecosystem. Though I can tell you that it's not good for Visa and MasterCard, that their rails keep being bypassed by the various ecosystems. Some they play with, some they don't. But overall, it's kind of creating these siphoned off communities in some ways.
Mm-hmm.
I would say to complement that, I think Visa is also being aggressive in that space and recognizing that they can move money through Visa Direct and through other programs. They're empowering the earned wage access and early access to paychecks for those types of companies that do income smoothing in between paychecks. So those types of features are becoming more and more relevant. But I think to your point is that the feature set is actually becoming more dynamic. We're not seeing companies fast following like we used to. So it was like unbundling of fintech, which we did at CB Insights, and then you'd see the rebundling of fintech across this neobank stack, ultimately trying to become lending companies, because that's what the margin is. Now with PayPal versus Square, Square's got their SMB ecosystem, and the connection for them between the consumer and keeping them on Cash App to then enabling them from the merchant's perspective and highlighting the acquisition. It's really them closing that ecosystem. That's been the biggest thing, their moonshot that they wanted to build towards. So I'm excited to see that for PayPal, it becomes more relevant as a top of wallet feature versus just a daily, movement of money. They did acquire Venmo, very close in feature set in terms of, launching neobank products as well. So I'm curious to know how they balance that strategy internally, enabling both to grow, and when consumers ultimately want freedom to move between both
Right, for sure. But what Dan Schulman said, I saw him quoted recently saying that the consumers don't want to have 7 or 8 finance apps on their phone. They really just want to have 1 or 2, and I tend to agree with that. I think if you can get everything what that Robinhood does and that Square does and others into one app, I mean, I could see. I feel like, and they're going to add a whole. I mean, PayPal's adding. They've already publicly said they're going to add fractional stock investing, and they're going to go right after Robinhood as well.
Yeah.
I think they're one to watch. I feel like I may even get
move your direct deposit.
Yeah, I don't know. I'm going to play around with it because it's the most fully featured app. It's got shopping, it's got rewards, it's got crypto, it's got bill pay, it's got savings, it's got everything.
That's exactly what they want.
Yep, exactly. So, anyway, moving on. I want to talk about Coinbase. They backed down, shall we say, after clashing with the SEC. Their CEO. We talked about that a couple of weeks ago. He had some harsh comments for the SEC, and it sounds like, and I've spoken to a lot of people in the industry after this, that the SEC, and Andrew Dix said this on our show, that the SEC really is not doing a really nice. They're not really doing the right thing by fintech companies in this situation. They're not telling them where the goalposts are. You got to guess, and so bottom line, Coinbase decided to withdraw their lending, their plans to launch their lending product. This is basically earning interest on a stable coin that you can buy on the Coinbase wallet. They're not going to do that anymore. The SEC, and they're trying to create a regulatory framework now to work with the SEC, but boy, and there's a lot of companies out there doing the exact same thing that what Coinbase is now saying they won't do. And where does that leave them? But boy, what do you guys?
It's an endless seesaw right now if you're a fintech company, because depending on who's in power, it drops that way, and then someone else comes to power, it goes back the other way. Then there's this handful of influential senators or congressmen or women that don't like a certain segment of the market, then it flows that way. And it's like, if you want to compete globally, which everyone talks about in their talking points when they're on their election trail, all this stuff, this is the exact opposite of competing globally.
Yep.
In taking markets and moving the goalposts not even further down the line, they're just moving them all over the field.
Right.
And nobody knows how to operate consistently with that. And they really should be doing, what the CFPB and others used to do a lot more of, which seems to have gone away a bit, which is talk to the fintech companies, figure out where the right balance is versus we'll talk to you for a little bit and then we'll threaten you. And to me, I think it's the exact wrong thing. I think it's by a certain wing of, the current party in power that is afraid of the crypto area. And they want to make it seem like it's the death knell of finance. Meanwhile, the banks are just kind of skating by right now with no problems at all. It's quite ironic kind of what's going on in the market at the current time. And I feel really, really, I don't know, bad for fintech companies, but it's a really challenging time to build a company for the future when that future constantly changes.
Mm-hmm.
Well, yeah, move fast and break things doesn't work in finance, because move fast and break the law, you go to jail. So I think there's some Coinbase is reading the tea leaves with the current, SEC chairman statement saying we're going to regulate this thing like securities, and it's a framework that was designed prior to crypto existing. So
but designed in 1933. Let's be clear.
Yeah.
For a lot of this stuff, it's
an antiquated way of thinking about it, but I think we want to put something on the board because of what has happened following, the ICO scams that were rampant. Like there's a hard stance, and then there's we don't have enough resources stance. So we're just going to put something out there. It's a bit rushed. I agree. I think it could set America back in terms of its adoption and applications, and that ideation, that innovation is going to be built outside of the U.S. because again, it's designed to enable frictionless moving of finance, and there are countries where it's helped curb hyperinflation in the thousands of %. So there's applications that need to be built out. Maybe this stifles innovation for the US, but consumers and the evangelists are certainly going to continue to find ways to innovate around the gray of the regulatory frameworks.
Yeah, I just wonder when we're going to have like Ripple threaten to leave the US and base themselves elsewhere. And I feel like
there is a middle path. Like, there's a sensible path. Now, not everyone would be happy in the sensible path, but there's a version of it out there. And I think that we're missing that. And it's really going to be, setting us back from various places around the world. And yeah, some of the places around the world kind of go too far, obviously. But I think there's a really sensible way of going about these things. And especially in today's environment in the US, it just doesn't seem like the sensible path is the one that's taken most often right now, at least. Yeah.
Got to protect consumers. Anyway, let's move on. So Robinhood, they basically announced this week they're going to be rolling out a wallet. Now, I mean, I've actually been holding Robinhood crypto for some time. I've got a bit of Bitcoin and a bit of Doge in Robinhood, and it's been surprising to me. I just checked the app just before we came on, and they've only got 7 coins still. But there's no wallet feature. You can't like send to another wallet. It's all inside a walled garden of Robinhood. But that's changing. They're going to have be able to send and receive crypto from a wallet, any wallet anywhere, and that I think is an overdue feature.
It's an interesting one because you can't do it with stocks. You can't easily transfer your book over. You've got to call a broker if you're trying to even exchange brokers. You can set up gift accounts for people, but there's no real peer-to-peer elements to their platform in that regard. So this is a cool feature for that to maybe start to happen. I'd be curious to see what the take rate is on interchanging of coins just from one wallet to yourself. Like how much are people trying to get in and out of their own currencies? It makes it a more daily active use than it already is because it is pretty viral, especially given the correction, the slight dip on Monday. We'll see.
Yeah.
I think it's a natural next step for them. It's just this, constant iteration on the product. I'm sure people have been complaining to Robinhood about this, and so now they'll add this, and in a few months we'll probably see some more. I mean, they've got probably a boatload of money sitting in the bank account to continue innovating, and I think the bigger issue for Robinhood, which we talked about many times, and not necessarily in this discussion that it's needed, is what happens with payment for order flow.
Right. Well, let's segue that into Revolut. Because we have Revolut, who we all know well from the UK, have been in the US now for some time. They secured a US broker-dealer license. It took them 16 months, apparently, to get that. And they are rolling out commission-free stock trading in the US, going directly after Robinhood. And, of course, their business model is payment for order flow.
You'd have to think that, they probably talk to the right people, knowing that payment for order flow is probably not going anywhere anytime soon. Now, the SEC has talked about it, and maybe they'll adjust it, but everyone does this. Peter, we've talked about it many times, TD Ameritrade, everyone. So it's not just the Robinhoods of the world, which gives them more leverage in keeping it versus just completely banning it when it comes to the regulators, that it's not just these startups that are doing it. So I think they probably know that it's not going anywhere, even if it might change somewhat.
One piece of news that sort of complements this, and it sort of ties back to the crypto elements of what Robinhood's also doing. Did you guys see that Interactive Brokers is partnering with Paxos to launch crypto? So they're going to start being a facilitator of crypto trading.
I did not know that.
You're starting, it happened yesterday. I saw it as a sort of a sub bullet. I started to pay attention to the Paxos gentlemen because I met them and they taught me how to make an NFT at Moves DevCon. Our smart contract is super cool. And I caught that. And when we say that the regulators are putting a hard stance and potentially holding back innovation, maybe it's enough to just bring the hard stance institutional money in it. And that makes this space a little bit more credible long term. So kind of like putting all of these pieces together because all these stories kind of complement each other. On Revolut's side of things, it's just been slower to this market in terms of getting into the US. So they got to launch something that's fast and differentiated, because fast following other standout companies isn't going to get them market share
Right.
when they're an international company. They need to move the CEO here. They do have a US team, but you need leadership on the ground such that when you look the institutions in the eye and you say, yes, like we're committed to the US as a market and the credibility of our consumer accounts is first and foremost, that's something that'll put them out. Stop launching features and start, playing like a team.
Right, exactly. Because I mean, the Revolut. I looked at their offering, and it just wasn't differentiated. There just wasn't anything that was unique. And I think this what they're launching with stock trading, while not unique, will certainly bring them some attention and bring them some. I'm sure they'll bring them some market share.
I think that when they came to the U.S., they need to have a different hook. And when they came, it was just, Revolut's here. We're a big name around the world. They thought that name would carry them into the U.S. And they've kind of muddled around since then. And I don't, in the U.S. at least, like you mentioned, I don't think they have an identity right now.
Right. Yeah.
Well, we have Venmo. In Europe, it's Revolut Me. Here, it's Venmo Me. So they're paying in a highly fragmented market with established incumbents in fintech in each marquee feature that they have abroad.
Right. Well, they are, and they are going to work on like that Mexico-US corridor for remittances. I know that's something that they're focusing on. They really made that they made a name for themselves with international payments and just transfers, and so which is it. Most Americans never send money outside this country, so it's just not
unless you're part of the population that has immigrated here, and then you're sending money back home.
Yep.
But the Native Americans, people that are usually born in the U.S. and haven't immigrated here, don't know that type of money transfer. It's not normal for them.
Yeah. Okay, let's move on. I want to talk about Amazon, and this was an interesting one to me. Lendistry. I've had the CEO Everett Sands on the podcast a while back. He, they're I mean, not a large company. They're a CDFI focused on minority businesses. They do loans to, and I checked their LinkedIn, and it says 204 employees on LinkedIn is what it said. So they're not a big deal as far as volume and that sort of thing. But Amazon Community Lending was launched with a pilot program that they are doing with Lendistry, and Lendistry said that Amazon came to them to launch this program. And yes, and so anyway, and these are going to be loans 10,000 to 100,000, up to 2 years in duration, less than 10% in interest rates, and to try and go like it's obviously for Amazon people, Amazon sellers, to try and help them with some low cost financing. So I thought that was a super interesting story this week.
Yeah. To Todd's point earlier, in terms of ecosystems, I mean, they're a leader in marketplaces, and anything that they've ever done in financial services is first and foremost to serve Amazon itself as a customer. So enabling consumer finance or merchant financing options, and this is a space that they've been a leader in terms of lending to SMBs, using alternative data around volumes and helping advance people money in terms of like holiday season to ramp up for needing to have inventory on file. Like that's something that they have a strength in. So I think that this partnership is probably more about expanding the SMB access points, like because you've got other companies now that are doing the Shopify is built, an entire platform that is about first and foremost the merchants on their platform versus Amazon, which is first and foremost about Amazon. So this is it's a way of saying that we need to compete more. Like they've always built their own functionality. So the partnership, it's got to be broader in scope. Like there's got to be an access to a distribution channel that they're not reaching today to be willing to go out with a partner when they can do this.
They obviously could. And they do have a massive lending program. I mean, the Amazon lending, I mean, I don't know, they don't really share much in the way of volume, but
no,
it's from every time I hear people talking about it, it's large, like in the hundreds and hundreds of millions, maybe even like billions of dollars that have been originated. Okay, let's move on and talk about Moneyline. Our good friends over at Moneyline, they started trading as a public company today. They chose the ticker ML. I thought they would have gone with Lion personally, but they went with ML, which, maybe they want to sort of the machine learning kind of angle is Moneyline, obviously ML as well. But they started trading. Not a great first day. No, it really wasn't. I mean, they closed down 13.7% today. But you don't judge a company's future based on one day, but they are out there now as a public company.
And now's the real test for Moneyline.
Yeah.
Publicly traded company. We know everything about them now, and now's the real test of the business model.
If I had this kind of access to this type of data when I was an analyst, trying to guess who had real traction with customers, would have been amazing. Now we have all these benchmarks because they're not the only ones that are going public, right? You've got everyone that's got a SPAC going public. You've got data now on these business models to see like kind of where are they going. And if it's a SPAC, you can get the pleasure of looking out into the future versus an S1. You have to be very cut dry. Like this is the state of play. The SPAC is very aspirational. Speaking of a company that also did a SPAC recently. So it'll be interesting to see how markets judge them. I know you guys covered Green Sky last week, but that's one that I held. I finally have broken even on, but I held for a long time. And I just didn't understand why people judged it as a lender when it carried no balance sheet risk. And that's what it's going to do for them. But it was an underwriter, and it was a data. It was one of the original BNPLs, just operated in the backdrop.
Yep. Yeah, I just think that people didn't understand Green Sky. It was too. I think their model was not very transparent in many ways. So like they suffered from that. But anyway, Moneyline. I think I love the thing. Sorry?
Moneyline. I invested in the SPAC just because at the wave of it, it was one of those things. It was marked for fintech, so I was just buy a bunch of them. So I don't want to look at my portfolio today, Peter, but I'm hold.
Yes, exactly. You've got to be a long-term investor here. But and the funny thing is, this really didn't make much news this week because it's just another fintech is completed their SPAC and now they're trading. Okay, great.
It's funny, you remember back. Earlier this year, it feels like years ago, but the fanfare around SPACs, and then it's then you go through the lull because the companies, all the stuff that goes on with them, then they finally get public, and by the time the companies were getting public, the excitement and the exuberance around SPACs had gone. Right. So now you have kind of these releases that are a lot more mum than when we heard the combination way back when.
Bill, as well. We talked about it every single week.
Oh, yeah.
Another SPAC deal.
Probably like 6 weeks straight.
Yeah. Yeah. And big deals. And
we're not done yet. There's still some. I'm sitting.
I know. Well, I mean, we talked last week, we talked about Pagaya, $9 billion, $8.5 billion SPAC.
They could have gone the regular way.
Yeah.
That's the question. When you look at the revenues of some of these businesses, like they have the financials and the prowess to go. That's why you saw Coinbase, Robinhood go the traditional way, Stripe will as well, Plaid will as well. If and when they do, they're not going to SPAC.
No.
Yeah.
Okay, so we're going to move across the pond briefly and talk about our good friends JP Morgan Chase. And they have launched the Chase app, which, if you remember back with their Fin app from a little while ago, I think it was like 47,000 or something, a really small number of users.
It was right under 50. Yeah, right under 50.
Yeah, small number. Yeah.
1 year, they shed it.
I mean, Chime adds that like in 2 days, right? And and so that didn't go well. Now they've said, well, we're going to go and try our hand in the UK, where it's another very competitive market, a mature market when it comes to digital banking. But they're rolling it out. It's now live. You can go download the Chase app if you're in the UK. And I mean, is the story going to be any different in the UK than what happened with?
I think the issue they had here biggest was what was different between Fin and Chase. Yeah. Like they were innovating the Chase app at the same time they were launching Fin.
And Chase has got a decent app.
Chase has got one of the better banking apps out there. It's not as slick as some of the fintech ones, but I'm a Chase customer, and it pretty much does almost everything you need it to do. And for a bank, it's a lot more innovative than a lot of the other apps out there. And then they launch Fin. It's just like, why are you doing this to get maybe a new customer base? But you already have the most in the US. Just keep innovating your regular app. Yeah. So I think them launching as Chase is better in the UK. It's just using their brand, which is the biggest in the US. But similar to like Revolut's launch here, is there some hook or difference that they're giving to the UK customer that they don't currently get with their offerings? I don't know.
I mean, and it's not, from what I gather, there are some, they're not, it's not like astounding. They're giving I think 5% cash back or something for 5% interest rate on savings, and they're giving 1% cash back on debit cards as an intro, but it's not overly compelling.
To your point on what Finn was trying to accomplish, it was to attract a younger user base without fragmenting their existing customer base. He started putting like emojis on payments, on the experience that we've actually are fine with today, that would have probably turned off the profitable side of the user base. But all those features were just fast follows on things that have already existed. So they weren't differentiated. They weren't unique. Let's see what they do in Europe. They made 2 recent acquisitions that I think are worth highlighting. So they acquired a company called The Infatuation. It's a food blog I'm pretty obsessed with. They've recently bought Zagat. And what they do is they create like food reviews, and they also have rewards and events. So if they paired that with something like the Chase Freedom card, and you're getting early access to events, like that's kind of a play to go after MX and some of the food experiences that they have, especially in New York. And they have made investments in the restaurant payments space with Touch Bistro. So they are being a little bit more savvy in some of the vertical plays. And then the other thing that they acquired was a company called Frank. It helps fill out the FAFSA applications, digital FAFSA, to enable students to access money that they otherwise didn't know that they qualified for. That was a bit different. They haven't done a lot in student debt before, but they're seeing that we need to get into universities younger, and that's been the play. Like you can't do it anymore, but the credit card companies used to go to campuses and market to students and rack up all this debt. So it's a debit play. So I'm still optimistic about some of the things that they're going after. And of course, like we talked about, investing in Plaid and eating their words there, recognizing interoperability is necessary.
I'll tell you what, they are probably the most active bank now when it comes to fintech M&A, and
not my job anymore.
Yes. Anyway, I want to finish this week on NFTs, because we have there's been some really, it's been a crazy last couple of months on the NFT market. And just today, Tiger Woods partnering with Tom Brady's company Autograph and DraftKings, and they dropped some stuff on Tuesday. They dropped some NFTs today. I actually sat on my computer at 1:00 my time today and joined the drop, and then there was 100 available, and I was assigned randomly number 23,000 and something, and so I didn't get it, and then the second one I was number 9,000. So I wasn't able to get any of these drops. But there's already, like, the ones that were dropped, the Tom Brady's ones that were dropped last month, which basically is exact same thing that Tiger Woods doing, this to graphic picture and an autograph, and some of those things are going at like 100x what they were bought for, and it's a crazy market out there.
There's a couple of platforms that raised this week. I know we're touching up on time, but new unicorns in that space have probably been minted faster than any other fintech category that we've seen in the past. So there's a lot of fuel behind it. I think they'll find some. Again, they often say that the next big thing looks like a toy. These certainly do look a bit like a toy,
which I actually think is good in one sense, because it lets everything kind of come up, down, go crazy, just like crypto kind of at the beginning, kind of went up, then it went down, then it went up, and now it's kind of slowly building. I know now the regulators are kind of
I was about to say
that
the NFT is security. Don't get the gang in trouble.
I think some of the stuff that's happening now will help it in the future create a more sustainable market. And so I'm all for stuff like this. And
to think that the Tom Brady Tiger Woods stuff through DraftKings, you can pay on a credit card, but it's still an NFT with that you can store in your OpenSea account or whatever. But then Time Magazine did a drop today as well, and that, when I looked at that, you had to connect a wallet, like a MetaMask wallet, and it's 0.1 ETH to for their NFTs, and they're dropping a few thousand over the next week or two. And they're making it so that it's a little bit. I mean, it's more kind of the way the NFT market is has been, has sort of developed with really it's all about it's on Ethereum, and that Time Magazine could have done it by a credit card, but they decided to go with the MetaMask route. But NFTs, I mean, it is crazy. I think there are people going to make lots of money, and then at some point it is going to pop, and people will lose a lot of money. But anyway, we are out of time, I'm afraid. So I want to thank you everybody for watching. Thank you, Todd. Thank you, Lindsay. It was always fun to chat with you, and we'll be back same time next week. Have a great weekend, everybody.
Thanks.
Thank you.
Thanks, Lindsay.
Bye.
Bye.